What's up, my fellow traders? Hope you all having an awesome weekend. A weekend update here. And in this weekend's video, we're going to do analysis of natural gas, gold, silver, and crude oil. But as always, over the weekend, I want to give you something really valuable to learn and give you a knowledge that will help you to take efficient trading decisions and so that you avoid some trading mistakes. In the first part, I'm going to show you some trades I took, how I managed those trades, and also a trade where I tried to manage it but that did not work out, and also one more trade that blasted up against my direction and how I saved my account to blow up. Now, if you have not seen this video yet, how to trade candlestick pattern with the correct manner, how to identify a valid candlestick patterns, what are the pin bars, what are the 382 candles, what is a valid bullish engulfers, and how to trade morning stars and evening star patterns, please go ahead, check this video out, because if you follow me here in my YouTube channel, then this video will give you everything, all the terminologies I personally use in the videos that will tell you everything whatever I talk about, and my videos will make total sense to you, all the entries I personally take according exactly to those candlestick patterns. So quickly starting with my losing trade. In trading, we have winners. Of course, I show you the winners as well and the reality checks as well. It is very important because when you have 2 to 3 weeks, a good winning streak, and I don't want you guys to have your head so high that you think that you are invincible. No one can defeat you in the trading market. But trust me, yes, we had a really nice, badass year so far, better than the last year. But that does not mean that the next coming months will be same like that. That is why it's very important to manage your risk in a perfect manner, the one I've already shown you in the video. The 2 months challenge, I've already uploaded that video in my playlist. Now let me show you quickly this trade which I've sent to my members. I personally took as well right here, and just to show you that I personally took this trade, it is right here that hit my stop loss. So I trade in my real account. That is why I show you these trades, so that you know that it is something I personally do myself as well, the one I'm trying to teach you. Now, do you see the importance of a stop loss? Now, that was a CPI candle, a big candle, and I knew that could happen. And that is why I was prepared for a losing trade first. Now, the professional traders, the first thing they think is how to minimize the loss. And if there is a loss, how to come out in a least loss, but increase your profitability, right? So that was my first thing in my mind where I entered with this bearish engulfer. Now I want you to look at these pattern, because this is something I'm going to show you in a very short while. The exact same entry pattern happens in the other markets and how nicely that played out. That does not mean if my stop loss is hit, I stop trading this strategy. Now, right here, I entered here below 50 EMA. This is something I talk about in my every single video. That's why it is not an alien for you. I entered here and the CPI just blasted up and hit my stop loss. And what is my stop loss? Only 29 pips. What was my risk? Less than 1%. Why is less than 1%? Because it was a major news event. It was a Fed meeting. It was a CPI. Why would I take high risk? Now, the mistake traders do, they just think that yes, if the news will come in your favor, you can make a lot of money, and that is when they miscalculate that and they don't put the stop loss in a hope that yes, if a CPI will release, it can push down in your favor. Still, you need to be really cautious with the stop loss, and this is a good example that it gone against your trade. And if there was no stop loss, how much loss would that be without a stop loss? Because that one single candle just pushed up, and this one single candle was how much? 127 pips. That is why I always stress you guys, stop loss is very important. Now, if I don't take any credits for the news that goes in my favor, I don't say that yes, if there was no news event, this would be a winning trade. So similarly, if I see this condition, I will enter the trade every single time once my conditions are valid. Now, a good example I want to show you very quickly right here, GBPCAD, that also pushed up with a news candle massively. Now, everything was going with my analysis. The price forms nice double bottom, and we were also prepared to enter the trade from this area of value on 1 hour time frame right here. As you can see, the double bottom forms, it massively pushed up. Now, Here my risk was lower as well, but as I was entering from the zone, I had a better risk to reward ratio, and that hit my take profit. So you see how the news goes in your favor, it can also go against you. So that is why very important, when you have big news events out there, make sure you are under your risk capital. Now I want to show you one trade that I was trying to manage. Now, like I always say, and I always recommend beginners that start to use one-to-one in your beginning. I know there might be people out there just trying to tell you that use better risk to reward ratio or go something like this. Now if you do that, that is beneficial, it is good, but not at your beginning levels. When you are a new trader, start trading with one-to-one, gain your confidence. Once you learn the system, once you know all the rules, then start managing your risk. And this is a good example I want to show you. Now, after this winning trade, right here with one-to-one, that is fine. I did not manage it because it was almost there to my recent highs. So that is why I just kept one-to-one. Now here, after this pullback, this was a trade alert I've sent to my members as well. Right here, which was a winning trade. I know the price was a little bit higher, but it did give us a pullback to re-enter this trade. That is why I entered with a limit order if the price is a little bit above my entry price. So we entered it nicely, a good winning trade. But what I did, I have personally entered this trade and I kept my stop loss my take profit right here equal to the previous highs. Now that is something I have done. I have kept my stop loss exactly the same, but I've just chose to enter 1.421 instead of going one-to-one. But as you can see, that did not hit my 1.421 target, but that hit one-to-one target, as you can see, and that is something you will do once you are professional and once you learn the full system. Let me show you another example where I managed my trade and that nicely played out. So right here, a good example of a pullback bearish entry. What do you see? A nice trend, right? And what do we have? A bearish engulfer. Now this was also an entry that could be managed till this zone. Now if you are my student and you have completed my full course, only then you're gonna get to know how to manage your trades from zones to zones. Now, then that is what you'll find in the risk management section. So don't worry at this point if you're still learning. Focus on your first two sections. At this point, bearish engulfer, and right here, this was a trade alert that was sent to my members that we have a valid entry. And now we are going to enter this trade. How nicely this played out and why I managed this trade to this zone. Now initially that was only 32 pips trade, one-to-one, like I mentioned, that sometime it play out, sometime it won't. At this point I had no idea how it's gonna play out. Now if you are a beginner, let's say if that did not play out and just pushed back up, then it will just shake your confidence. That is why I want you guys to learn the system first and then start managing it. Now, why I managed till my zone right here? Because that is a level of significance where the price was previously nicely pushed lower from. And if you look back, a good level, right? So that is why I don't want to fight with the liquidity area right here, and buyers are possibly sitting in this area that will push the price up because that has happened in the past. So that is my zone where I want to exit right here. And as you can see, it starts to reject from this area. So that was a good decision, and that is what you'll learn in the course as well. And that is how I managed this trade. You see the insane amount of profit here, 132 pips. And before I enter my trade, I saw few things. I analyzed few things. Number one, the price is trending nicely lower between both the EMAs. Price has formed a bearish engulfing pattern below 50 EMA. And when I go back and see, price is also at a level of resistance that was acted as a resistance and support as well right here. Right here, a significant level. So all these were my analysis here on this pair. Now at this point, as you can see right here, the RSI was also at the lowest point and the sentiments were bullish on the trading platform. But my analysis was not with the sentiments. My analysis was with my own trading system, right? And that follows all my rules according to my pullback entry. That is my valid entry. Now one more trade before I move ahead. What do we have? You see how similar the entries are. Bearish engulfer, right? Exactly the same. That is how you learn trading. That is how you have your rules. Price below 50 and 20 EMA. Nice gap between 20 and 50 EMA. Exactly same entry we got here on Euro CHF. So That is how we are looking at the market, not blindly entering the trade, not just entering the trades, looking at the RSI is being overbought, oversold, and you just start buying and selling. Look at the extra confluences, filters, and the other factors that will make your signal much stronger, and then adjust your risk accordingly. High probability trade, good risk, yes, 2%. If you have a trade that looks risky, reduce the risk, 1%, 5%, 0.5%, sorry. And this is something which is not alien for you. I show this, entries, patterns in every single video. Now there are some more trades we are still in. That is what I'm going to discuss in the next weekend's video. Now I'm going to show you one commodity here, which is wheat, along with the cotton, aluminium, sugar. This is one of the commodity I've sent to the members. Now here on wheat, we were already prepared. The price is now pulling back to the trend continuation bullish area below in green. That is why once the price hit my zone, I'm going to take my buy trades on smaller time frame. And what do you see here? Price came down in my area of value. And do you see any conditions above that? No, nothing. But what do we have? Double bottom right here. Then why not entering this trade? Divergence, let me show you. A nice and clear divergence with a double bottom in the RSI. See my analysis. It is not a piece of cake to create a signal. It is a lot of analyzing the market. Look at the market, learn the patterns, and then you see how nicely we have a double bottom that nicely hit 1.421 targets easily, and that happens on 1 hour time frame. Now I want to show you the zones that played out nicely and how the rules are met. If you have seen my last video where you have learned how to enter from the zones, right, and how to trade double bottoms, double tops, and I've already uploaded a video right here, if you see here, for the beginners, where I've taught you how to mark the support and resistance and how to take your entries. If you have not seen that, this one and this video is really important if you're really serious about your trading. So start with, now I want to show you this trade by placing these both reports on side by side. That was sent on 27th of last month. And on 27th of last month, we were looking at this green zone for the possible pullback and then take our entries, right? And right here, this was just sent last week where we are looking at this area for the possible sell trade. Now, there was a CPI, there was a Fed that fueled the price up, but that did not break above my resistance level. And exactly with the rules, from support we entered, and then from at the area of resistance we entered sell trade. So buy from the support and sell from the resistance. And what happens in between, right? In between, we are just looking for pullback entries, right? If above 50 EMA, then buy entries. Below 50 EMA, then sell entries. Simple as that. So as you can see, now that does not look like an entry for you, right? So if you remember, if you follow me from a couple of years, if you are my student, you know the way I trade. Now coming back on 1 hour time frame, what do you see? Nice double top pattern at my area of value. First top broke back below the zone. Second top bearish engulfer. And as you can see, 1.421 target has been hit. And how nicely buy from here, pullback entry, sell from here. And that is how we need to be trading with some rules. Now as you can see right here, the GBPUSD report was sent last week, not this week, a week before that, and an area from where we were looking to enter our sell trades. It nicely pushed lower from the area we've been waiting to sell GBPUSD. Now it did not give me any condition to sell on 4 hour time frame. That is why I did not enter this trade, but that nicely pushed from my area. But I always look for the condition to enter my sell trade, some sort of signals. That is why I just don't enter when the price is inside my zone. But it reacted nicely from where we were expecting for the price to push lower. So that is what I want to talk about in the first part of the video. I hope you enjoyed it and I hope you have learned something out of it. And that is how we need to be managing our trades. That is how we need to be trading with the zones, with the area of value, identifying our valid zones and looking for your entries. If trending lower, look for your bearish trade. If trending higher, look for your bullish trades. If in the zone, enter the counter trades. Be simple and don't plot so many indicators on your charts. Don't plot so many lines on your charts. For example, if I plot a line here, here and here, now that just looked like a mess, right? So if you do that, if you say yes, that looks like a resistance, if you go back, that looks like a resistance, that looks like a support. So every line you draw, that will look like support or resistance. That is what we need to avoid, because the chances will really increase if you do that. Keep it simple, have a clean support, clean resistance at the higher time frame, and then trade on a lower time frame. In this case, daily time frame. Entries are on 4-hour time frame or on 1-hour time frame. If you want to trade on a smaller time frame, mark on 4-hour time frames. Trade on 1-hour time frame, 30 minutes time frame. So keep it simple, keep it clear, then no one can stop you to take your trading to the next level. So let's wrap this first part and start our analysis with natural gas, gold, silver, and crude oil. Starting with natural gas, and what do we have right here? Symmetrical triangle has been formed here on natural gas, and as you can see, a clear pattern, and I've already made a video how to trade triangles, symmetrical triangles pattern. So right there we have a clear pattern, and all we want to see a breakout. Now, as the price is still trending higher, my expectations are that price will break above this symmetrical triangle pattern. So if that happens, in that case, I'm going to keep my stop loss below and take profit 1-to-1 initially, and then I will look at the level above to take my counter sell trade. So as you can see, very clean charts now. All the mess is gone. Here, a new level is 3.427. That goes up to 3.638. 33. Now, a level from where if we are broken above, we're going to look for the counter trend trade with the bearish engulfers or double top entry pattern. For now, I'm just looking for the pattern to break above. If that happens, we're going to go long. But let's say if the price break below this pattern, and closed is very important. If we have a break and close together, then we have a signal that price will likely push down back to the previous trend continuation bullish level. So wait and see. I want to see a good momentum candle, a good bullish candle like this above this pattern. In that case, that will be a very aggressive entry. So if that happens, aggressive entry will be right at the close. But if you are not an aggressive trader, you want to be extra cautious, wait for the good signal. Then after the break, wait for the retest, bullish engulfer. In that case, we're going to go long. Must be above 50 EMA if we have a bullish engulfer. If broken below, then what I'll do, I will wait for one more red candle, then a pullback, then a bearish engulfer, and gonna go short from here. So this is what I'll be looking at very closely. Wait and see. Once we have a conditions, only then we're going to take a trade. Breakout above or breakout below, that will decide where the price is going to push higher. But for me, at this point, my bias is upwards. I want to see a price to break above, and expecting a price to break above, and then we're going to ride along with the trend to the next level, looking at the nice uptrend, price pushing up, a good pullback pushing up, a good pullback pushing up with the pullbacks, and then a big and deep pullback, push up, new highs, pullback, and then I want to see a continuation like this. So wait and see how it goes. Once we have a confirmation, we are going to go for our trades. Now here in capital.com, right here a little triangle pattern, symmetrical triangle pattern, right here as you can see. Now here you see a little fake out, and then it pushes back lower. That is why I want to see some good momentum above the triangle pattern, then the retest, and then a continuation. But in this case, stop loss will be below anyway, but that is why less aggressive entry will be safer. But if you're an aggressive trader, after the breakout above this triangle pattern, that is entry itself, take profit here, or 1-to-1 will be initially, stop loss can be below this pattern. So that is what I'll be looking at, still in an uptrend, and breakout will decide above or below. My expectations are the price will gonna broke higher. If not, if broken below, I want to see good candles, 2 candles, then a pullback and bearish engulfer, and keep on taking shots. Now the zone here, a new zone which I've just marked over the weekend, which is right here, 3.130, that goes to 3.287, from where we're going to look for the counter trades with bearish engulfers or double top entry confirmation. Here on NEMEX futures, exactly the same, a nice pattern has been formed. All we want to see again a breakout. Now zone here on this platform is quite higher, which is right here. That is why all I'm looking at a breakout above, then a pullback, and the continuation towards the upside. The zone, the major zone here is right here, as you can see the number in blue, from where we're going to look for the counter trades with the bearish engulfers or double top entry confirmation. Wait and see how it goes. If broken below, then we'll be looking at this level for the next buying opportunity. And in this process and in the way down, we're going to look for the pullback, sell, trade, short term only. Next one, we have silver. Silver is still pushing up, and as you can see, has not broken below this level. I've mentioned in my last video, very important for the price to break below for the bearish continuation, otherwise we are not selling. Now 28.71, that goes up to 29.72, a level that where the price is currently inside of. Now at this point, if let's say price form a green candle above 50 EMA, then the very next candle closed back below 50 EMA, something like this, then we can expect a push lower. If not, in that case, we are still looking at this level to break above. All I'm waiting for the price to either give me a signal like a bearish signal below 50 EMA or break above completely above this high. Once that happens, I'm going to start to look for my pullback entry bullish, and I'm going to use this zone for my bullish area that will likely push the price higher to the next level right here, which I'm going to mention once we have a good momentum above this zone. So wait and see. If broken above this high, only bullish trades. If broken below this zone, only bearish trades, and a continuation to the next level, which I'm going to mention in my upcoming videos. Wait and see, not taking any trades until I see a clear confirmation here on silver. Here on gold, now I'm also looking at the ratio. We are still not at the level of major resistance here on ratio, which is right here. So that is why I'm expecting a price to even push up from here. Means that gold and silver will likely push lower. And when the price hit this zone right here, it will start to push down and gold and silver will start to push up again. So expect some good pullbacks out of gold and silver to the downside and then a possible push up. So coming back on gold, we are above 50 and 20 EMA, that is good, but we are still not broken above this high. So once we are broken above this high, all I want to see a pullback with a bullish engulfer and keep on taking long. So looking at gold is above 50 and 20 EMA, looks like gold will push the silver higher as well because silver is also in a support zone and ratio is also heading towards resistance from where it will fall and gold and silver will rise. So that's what I'll be looking at for conditions. Very clear, break above this high with a pullback and keep on taking longs until we hit the next level of resistance, which I'm going to mention in my upcoming videos. Lastly, we have crude oil. Now for the crude oil, we have a double top, which is a very aggressive double top. I've already sent these zones to my members, not this week, last week. As you can see, we have rejection. Now we are still not broken above this zone, which I've already sent to my members. Right here, as you can see, that was sent on 9th of June. So we are still inside this zone and we have a good chance the price will still push lower as we are still not broken above this zone. So once we are completely broken above this zone, only then we're going to start to look towards the bullish side. So we are still looking at the head and shoulder pattern, a possible head and shoulder pattern. We already have a left shoulder head and we are just waiting for the price to push up and form a right shoulder. So for now, we are above 50 and 20 EMA. That's why I'm not taking any trades for crude oil. This is just a little range, as you can see right here. So we are broken above this box. Then we have a good confirmation the price will hit this level. And if rejected from here, then we're going to start to look for the pullback and possible formation of head and shoulder pattern. If broken above this high, then we have a complete bullish confirmation here on crude oil. So we can expect some deep pullback to 50 EMA. That is possible, or back in the zone, followed by bullish engulfer, and price will likely push up from here. So that is also I'm looking at. That can also happen. Looking at this double top, we can expect some pullbacks, then a bullish engulfer, and then a push back up. So that's what I'll be looking at here on crude oil. So that's it for commodities, guys. Hope you got a value. If yes, give this video a thumbs up. Subscribe if you're new so that we can all trade together and trade efficiently. Hope you trade green. I'll see you guys in the next video. Have an awesome weekend. Take care.